All right, Bitcoin and Ethereum started the year with a nice 15% pop. The dollar is pulling back hard, inflation mostly gone. The Republicans are taking over the House. Gensler is on the crypto warpath. Is he just trying to save face? Well, welcome to 2023, everyone. Let's get into it. It's time for Money Talks. All right, welcome to 2023. Bill Barhydt here. Hope you had a great holiday. Welcome to everyone around the world. Do a little country check, see if where everybody's at. Please say hello in the chat. We'll do a little bit of an AMA. I'm trying to keep the shows down about 30 minutes, given everybody's attention span these days. But we will try to get to an AMA at the end of the show. So let's see how much time we have. We have a lot that I want to talk about today. One of the things I want to show you first, before we get into some of my thoughts and our team's thoughts on trends for 2023, is why are we seeing a bounce? Okay, why is this happening? So as of a few minutes ago, Ethereum and Bitcoin were showing a bit of a divergence. Bitcoin is up another 1.5%. Today, Ethereum back just a little bit, right around break even for the day, but both are up pretty big since the start of the year. Why is this happening? Well, let me give you my thoughts on this. And I think the most important chart that I can show you here, I'm going to bring up basically the US dollar currency index. And this is basically the value of the dollar versus a basket of other currencies. And you can see that since peaking more or less in the November timeframe at 113, the index has pulled back over 10% to 102. That's a big deal. You can see the run-up that the dollar showed from early last year, January of 22 at 94, all the way up to basically 115, and it's now pulling back. That weakening dollar basically tells us that inflation is subsiding, expectations for further interest rate hikes and credit tightening is subsiding. And I do expect vis-a-vis the latest CPI print for the Fed to start to either slow down or eventually stop, probably by the end of the first quarter, interest rate hikes altogether, claim mission accomplished, and then go into wait and see mode. And I expect a significant run at some point during that period in risk on assets. It'll be choppy. It'll be bouncy. I think we're in a spring. I don't think we're in winter anymore. And, we'll see. But I wouldn't be surprised if we see pullbacks here. The issue for crypto, and let me show you both Bitcoin and Ethereum, is here you can see on the daily going back to basically April of last year, that as we're bouncing, we are making lower highs. We don't want to see that. We want to see higher highs. So the first higher high that would tell me that we may have broken out of this winter and are truly in a spring would be a clear break of this lower high here from November, which would put us right at around 22,000. If Bitcoin hits 22,000, which is where it was headed before the FTX news, I think we're clearly in at least a temporary thaw, based upon the fact that the dollar is weakening vis-a-vis these expectations. Okay, all right. So let's see. And Ethereum, similar situation, right? We're seeing lower highs, even though we're bouncing. Now, the good news is we did make a higher high here versus the mid-December. And what we really want to see though is a higher high here versus the November drop, which would basically be a sustained close above 1,700. But even a close above 1,500 right now, I would say, is super bullish, except that it does put us right at resistance here. And so, in this environment, I care more about the dollar, inflation prints, interest rates than I do about the technicals on the charts, because the question is credit tightening subsiding, or is it around for a while? Meaning, is the velocity of credit tightening going to increase again? I don't think so. And I think that's the big macro story right now. I don't think the technicals are as important, but I'm telling you that, you will see bounces above and below these resistance and support lines. And it's pretty much held since last August. And a little concerning, but not as concerning as the credit tightening that was going on. All right. So again, just bringing us back here to DXY, this is really the key chart for me right now. And if we continue to see a dollar march towards, let's say 96, 97, and then stabilize, I think Bitcoin and Ethereum are going to do quite well. Interesting what happened with Solana. Solana bounced hard off the lows from late December. It basically troughed at 8 and has doubled since then to around 16. Now, those of you or us who may have had long-term positions, obviously we're way down. I have a very small position in Solana via one of our funds, which is way down, but I'm a long-term holder, and it's a very tiny position for me. I consider anything beyond Bitcoin and Ethereum super risky, super volatile, and I act accordingly with my allocations and trading strategy. Okay, so that's going to be the extent of. I'm happy to get into it in the Q&A, but that's going to be otherwise the extent of my macro commentary as it relates to the Fed and Bitcoin and Ethereum for today. So I'll stop this for now. Okay, so I have a lot I want to talk about. By the way, it's I'm wearing this jacket because it's absolutely freezing here in Northern California. We're on day, I think, it must be going on 5 or 6 weeks of nonstop rain with a few hours of breaks in between. It's absolutely crazy. We have something like 10 feet of snow in the Sierras in some parts. Mammoth Mountain by Yosemite hasn't even opened because they can't dig out yet. I've never heard anything like that before in my life. So anyway, it's crazy. So I do see a few questions coming up on both the Facebook and YouTube and Twitter live streams. I'll get to them in a few minutes. We'll talk about CPRX withdrawals. We'll talk about Flare and a bunch of other stuff, and any other questions you have. So just keep teeing them up, and I'll try to get to a few of them today. Would love a country check. Let me know where you guys are from. If you're in the U.S., which state. If you're around the world, which country you're calling in from. Okay. All right. So before I get into some thoughts on 2023, let me give you a perspective on 2022. Clearly, 2022 was the year that the inflation narrative infected everything, right? The rising dollar that I just showed you from last year, dramatically falling liquidity, caused just a massive pullback in all risk-on assets, but including Bitcoin and Ethereum, obviously, to multi-year lows. We saw the failure of Luna and then Terra Luna, which had pretty big contagion, which caused the collapse of Three Arrows, which we'll get into in a minute. The Grayscale Bitcoin Trust, there was an arb trade that was the basis of many firms, including some of our competitors. But that led to BlockFi, Voyager, Celsius all failing last year. FTX bailed out BlockFi, but it turned out they bailed them out with customer funds, which was a big no-no. And so we'll get back to that, of course. The Ethereum merge was so successful that it turned out to be a non-event. That was probably the big bright spot in the crypto landscape of 2022. CZ and SBF had a public spat over the FTT token late last year. CZ and Binance then dumped their position in the token. Within days of that, FTX and their sister company Alameda failed. SBF, other execs were charged with fraud. It's crazy. I mean, this is all in 1 year. It's all in a few weeks, actually. So now we're waiting on a restructuring of Genesis and Gemini, both of whom were sued by the SEC yesterday. So one of the things I want to just show you, and so I think it's important if you're really digging into the crypto markets, what's really transpired in the crypto space, and how did a lot of this failure and contagion actually start. Yeah, there was definitely fraud, and we saw that with FTX, but there was other stuff going on as well. In particular, I think it's important to understand what was going on with the GBTC trade, and let me try to explain. I'm going to bring up a nice little graphic here that our friends at Masari created. They do great work, by the way. If you don't follow them, you should. I've promoted Masari here multiple times on Money Talks. Okay, so what are we looking at here? All right, so basically, a lot of this contagion that we're talking about started with these grayscale trusts. What are grayscale trusts? These vehicles allow investors to effectively get exposure to Bitcoin as a security, right? These vehicles allow investors to buy GBTC, which is the securitized version of Bitcoin, in your 401ks or through OTC desks as tradable securities. But these were not ETFs. So they didn't have the typical creation and redemption mechanisms because the SEC wouldn't allow them to convert the trust into an ETF. Instead, accredited investors could create trust shares with Bitcoin, hold the shares for a 6-month holding period, and then flip them for what was effectively a pretty hefty premium that the market was paying to get access to securitized Bitcoin before 2021. So in 2020, if you were buying Bitcoin via GBTC, by and large, you were rewarded because the price of the security was going up faster than the price of Bitcoin. All right. So flipping and rolling this GBTC premium ballooned in popularity, and this so-called grayscale trade or GBTC trade got very crowded when GBTC hit $40 billion in AUM at its peak, which was, again, mostly due to stimulus, Bitcoin having zero interest rate COVID policies, all of which we've talked about many, many times. So Three Arrows and BlockFi accumulated a huge percentage of the trust shares with multi-billion dollars worth of exposure at their peak in early 2021. But Three Arrows decided to start offloading some of its exposure when the premium for GBTC started to crash. However, BlockFi did not. So now it turns out the premium went negative. So GBTC is trapped and underwater, but Three Arrows and BlockFi are still subject to 6 months of holding restrictions because it's not an ETF. So they have to eat all of these unrealized losses and are starting to lean on lending desks to allow them to borrow against the GBTC collateral. Now, it turns out Genesis, who's been in the news lately, which is a sister company to Grayscale, basically they have the same owner, DCG, is one of the only lenders who's incentivized to treat the GBTC as good collateral, given that their affiliate technically controls the shares redemption mechanism, and Genesis can generate lots of revenue via this interest that they're earning by lending in the interim. So you see where this is going, right? It's kind of this incestuous spiral that's happening in the background. And so exposed lending desks, in particular BlockFi, but also funds like 3AC, basically hold on to their GBTC position because they don't want to recognize the losses, which they probably just should have done. They should have eaten the losses and called it a day. But now they have to push further onto the risk curve. So this isn't a big deal in early 2021 because everyone's making money as Bitcoin and Ethereum reach new highs. The problem, of course, comes when the market comes down from their tops in November because the Fed starts raising interest rates at a very, very fast rate. So, of course, we all know what happens when the tide goes out, right? But Luna, at the same time, is growing massively and raises a $1 billion round early last year to diversify their treasury. And Three Arrows happens to be a big Luna investor. So meaning now they've got exposure to both Grayscale and Luna, which is like, in hindsight, you got to be kidding me, right? So the Luna Foundation buys $1 billion plus worth of Bitcoin with their Tether collateral from Genesis that they borrowed, who then proceeds to sell off Tether and knock off the peg, right? So in other words, the company that was lending to Three Arrows in order for them to, the company that was lending to Luna in order to collateralize and stabilize the Terra Luna currency was basically causing the Terra Luna currency to depeg at the same time. It's crazy. Other funds and trading desks see this peg break, and basically a big runoff on Terra and Luna ensues. And Luna experiences a total death spiral. Three Arrows is now underwater on two huge trades, both the Terra Luna and the Grayscale trade, and as a result is completely insolvent. So their GBTC from the lender Genesis gets liquidated, so Genesis gets their money back, but all of the investors in Three Arrows are completely screwed. And Genesis then takes possession of the 35 million GBTC shares that were used as collateral. This story goes on and on and on. It's crazy what's going on here, right? And so eventually, FTX bails out BlockFi. Turns out that BlockFi, of course, is being bailed out illegally with fraudulently acquired funds. And the contagion goes on and on and on. It leads to CoinDesk getting a scoop on Alameda's financials and token reserves, which are effectively, loaded with illiquid crap like, their own FTT token. And that leads to this public spat that I mentioned earlier between CZ and SBF, whereby CZ and Binance sell their FTT tokens. And eventually this leads to a run on FTX, which then exposes the fact that FTX isn't maintaining 100% reserves because they actually don't have the money in the first place. And so all of this working backwards started with this Grayscale trade that you see here. So I'm going to stop this. Crazy, right? So anyway, happy to get into that a little bit more, but crazy. So, all right. So onwards and upwards, right? Good riddance to 2022. I want to talk for a few minutes about some of the key trends that I think are going to shape 2023. So obviously we have to talk about regulation. We've got the House Republicans likely to take on the SEC. As of last week, the Republicans control the House of Representatives. The Democrats control the Senate. I think it's going to be the SEC versus basically everyone else. I do think that Gensler will resign in 2023 via pressure from Republicans who think that he's inept, and Democrats looking for an FTX scapegoat before the trial starts. We'll see. I think the Ripple case gets resolved. I think Ripple will likely come out a partial winner here. I don't think there will be clarity that the XRP sales were clearly a security offering. So I think both sides will claim victory, and I think Ripple will pump, which we'll come back to in a second. That's not investing advice. That's just speculation on my part. I think the Tornado Cash issue likely gets resolved. Just look at some of my notes. The developer, I hope they get released and the charges dropped. My belief is they probably will. But Custodia's suit versus the Fed will also have its day in court. For those of you who don't recall, Custodia Bank is suing the Fed over its inaction on their company's application for a Fed master account. But the Fed recently approved Bank of New York Mellon for a similar custody account in October. And our friends at Messari spoke with a couple of people who have had lengthy careers at the Fed, and they think that Custodia has a pretty strong case, and this would be a big deal for crypto banking in the United States. So we'll pay attention to that, and we'll bring you more details as they become relevant. So, look, as I said, Republicans taking over the House. Beyond all of this, I think the good news is that a divided Congress will mostly lead to gridlock, which means we won't see much in the way of new regulation in the U.S. All right. And Europe and Africa will likely be way more interesting on the regulatory front. And as I said, that's probably good news for those of us in the crypto space, because it also means they can't do much harm. Right. So the less new regulation they can create, the less potential for harm. All right. So, by the way, our friends at Messari, who, as I just mentioned, I'm a big fan of, also listed their top 10 crypto trends for 2023. So a couple of things that stood out to me. they use this phrase of Bitcoin as outside money, and from my perspective, without a doubt, the biggest banking news of 2023 was the U.S. and European response to Russia invading Ukraine. Okay, when the U.S. decided to sanction Russia for its invasion of Ukraine and more importantly to seize its U.S. Treasury reserves, it was basically a point of no return moment, not only for the post-Bretton Woods era, but for cryptocurrencies as well. Right? Zoltan Pozsar, a well-known macro analyst, called it Bretton Woods 3. This is a big deal, folks. He said, when the crisis and war is over, the dollar should be much weaker, and on the flip side, the renminbi the yuan much stronger, backed by a basket of commodities. Sounds familiar if you're familiar, by the way, with the history of U.S. Bretton Woods. From the Bretton Woods era, backed by gold bullion, to Bretton Woods 2, backed by inside money, which is treasuries with unhedgeable confiscation risks, now to Bretton Woods 3, backed by outside money, gold bullion and other commodities, referring to this renminbi. After the war is over, money will never be the same again. And he says, and Bitcoin, if it still exists then, will probably benefit in a big way from all of this. So this is super interesting. I actually agree 100% with this take. And people living in Ukraine, Russia, Argentina, Venezuela, Turkey, other war zones, other places where currency devaluation is happening, all are living this idea that Zoltan is talking about, and I think he nails it here. So I think we're going to see a lot more, and I'm going to talk a lot more about this concept of Bretton Woods 3, the fourth turning. I actually think 2023 is the year where the world is going to be forced to take sides. It's going to start in 23. It's going to be, evolve over the next 3 to 4 years. It's not going to be clean. It's going to be ugly. It's going to include things like Taiwan and Ukraine and other hotspots that we're going to leverage to basically force the world to choose sides. But I do believe a new monetary system is going to start to emerge. And I think it's going to be a three-legged stool with the dollar, China, digital China currency, and crypto. And I think that's how this will evolve over the next 5 to 10 years. Unclear how the euro and what part the euro will play in that new world order. Time will tell. It's possible the euro fails. I don't know. In any case, back to crypto. So 2022 was a super tough year for Bitcoin miners. I do think 23 will see a bounce off the bottoms as crypto prices stabilize. Anyway, at least for a while. So the woke left will continue to pound Bitcoin miners for excessive energy use without really trying to understand what mining is, why it exists, how it can actually help the energy grid. So I do think that 2022 will be a little bit of a relief valve year for miners, and I hope so, because I know I have a lot of friends in that space who are really hurting and invested way too heavily at the top of the market, and they paid the price for that. So investing heavily in equipment at a price peak is effectively the same as a levered bet on crypto, as we've learned. And obviously, any levered bets to the upside from the last 18 months have not worked out well. And so I hope for our sakes that the mining industry has a quick and speedy recovery. We saw something similar in 2018-19, and I think they'll recover again. I think Bitcoin Treasury will 5x for corporate treasuries from its current levels. That's my current prediction. It'll go from 10 billion today to over 50 billion for corporate treasuries as companies try to cash in on depressed prices. We'll see. I have no crystal ball, but it makes sense. If you have some conviction for this, a la Michael Saylor, and Michael Saylor can't be the only person in the Fortune 1000 that has any conviction for this. It just makes sense that some treasuries will look to buy at the lows. And of course, I fully suspect MicroStrategy to continue to buy at any price. People will continue to love their memes. Meme coins will start intersecting more with NFT projects, a la Ape and other coins now that I think are going to see, like I said, use cases for NFTs along with use cases for ERC20 type tokens, and that's something that we're paying attention to. I think XRP has a really good chance to skyrocket after settling with the SEC or potentially winning their case. I don't know. I obviously I don't give investment advice on this show, but I would not be surprised. I'm not betting on it. I'm not buying XRP, just to be clear, but I wouldn't be surprised to see XRP pump significantly if given where I think this is likely to come out. Even just a settlement, right, I think will cause a pump in XRP. I think Zcash and Monero will get increased positive attention as privacy within the L1 crypto transaction sphere becomes untenable for Bitcoin, Lightning, and Ethereum. And we see roadmaps that push out privacy quite really far down the road. And I think that becomes a problem in some of these hotspots. Okay. So that's my take there. I will basically come back to privacy in future episodes, but I do think this is going to be a much bigger deal this year than in previous years, partially just because crypto is going to be used more for person-to-person transactions, particularly in the stablecoin area. I think China, back to my earlier point, is going to start to push countries to adopt their digital yuan central bank digital currency, or CBDC. And the world is, as I said, is going to be forced to take sides. 2023 may go down as the year that Bretton Woods 3 really started. It actually may, in hindsight, have been February of 2022 when we canceled Russia from the SWIFT interbank settlement system and basically took their treasury reserves. But certainly, I think this year we're going to see 2023 really be the year where countries are forced to take sides. Oil settlements, countries, Saudi Arabia, Russia, are all going to basically be pushing countries to choose which currency they want to buy oil from. Now, obviously, the U.S. is now trying heavily or quickly to become a key exporter into Europe of liquid natural gas, and if that happens, we will maintain at least a portion of that settlement as Russia and the Saudis, basically pick and choose who their cohort is likely to be in this new world order. All right. My take is that the U.S.'s best chance in the midterm, going out 10 years to win in this new Cold War is to forget about the central bank digital currency model and start encouraging more private stablecoin issuers and encourage Bitcoin and Ethereum innovation within the banking system and startup ecosystem. I realize that right now, no one in Congress wants to hear about this, given everything that's transpired, but that's pretty much where we were in 2018. Okay, I think that this latest flush is going to take another year to 18 months to work itself out, and people have very short memories. I mean, who in Congress ever talks about Mt. Gox? No one, right? So I think people have short memories. People don't talk about Bernie Madoff anymore in Congress when they talk about securities regulation, and I think this will also be forgotten in favor of how are we going to win in this new world order? And I think it's important that we let the best technology and company win, and if we do that, the U.S. has a chance to remain a major player in the banking system for decades to come, right? And so this stablecoin market, as long as the dollar exists, is absolutely essential. And I think we run the risk of relying on a central bank digital currency model, which really scares me, but we'll see. And, look, there are three groups of stablecoins that matter. Of course, the full reserve and regulated, Tether, which remains outside the U.S., and then collateralized and algorithmic stablecoins such as DAI and Frax, which try to be fully decentralized. And the experiments with these algo stablecoins will continue, and eventually someone will figure it out, in my opinion. The upside potential there is just too large. Okay, so to reiterate, I think a lot more work and announcements in the CBDC area are going to happen. I'm dead set against this, but it's going to happen. And I'm against it until I see assurances that this will not create a new surveillance state in the West. And even if they say that it won't, I want to see proof that it won't, preferably via open source software, which I don't think the US government is in the business of doing, but you never know. All right. Anyway, I think a CBDC with surveillance capabilities is the end of America as we know it. This just can't happen. I can't overstate how big of a potential problem for the US that this is. Right. And again, from our friends at Messari, the two best lines that I saw in the report was the case for central bank digital currencies is framed as a panacea for the ills of the banking system that could be solved with policy and rules-based competition rather than taxpayer-borne science experiments with money, right? And the second one, a central bank digital currency would be tantamount to the FAA, Federal Aviation Administration, flying planes and building jet engines rather than defining competitive, rules-based safe passage in the skies. Okay, so I'm sure that point makes sense. All right, so let's move on. Last 2 points I want to talk about are related to Ethereum, right? So we've talked about Bitcoin a little bit, we talked about mining, we talked about central bank digital currencies and regulations. And lastly, I want to talk about Ethereum. So regarding Ethereum, the merge marked a fundamental shift in the economic model of Ethereum, right? The switch to proof of stake yielded a protocol environment which reduced the environmental footprint by 99%. All right. And so obviously this makes Ethereum more compelling as an investment to environmental, social, corporate governance, kind of ESG minded institutions. It also reduced new token issuance by 90% and eliminated $500 million worth of sell pressure from miners. So as the dollar continues to fall, this should be extremely bullish for Ethereum. I think in 2023, actually, as a matter of fact, I think in the first quarter of 2023, we'll see the unlock of staked Ethereum. Now, some people fear that the unlock of staked Ethereum is temporarily bearish and could cause a fall in the price of Ethereum. I actually think the opposite is more likely to be the case. Let me explain. Staked Ethereum represents anywhere from 13 to 15%, depending upon your math, of locked Ethereum. So I actually think that if more people are comfortable staking now because they know that their Ethereum is not locked, it could actually cause a spike in the price, because the more Ethereum is locked up, the less Ethereum there is on exchanges to trade, the lower the liquidity, which tends to raise the price, okay? After the merge, after the lockup is lifted on staked Ethereum, we'll hear more about Ethereum's full-on scaling roadmap, which is really what's next. This is a path towards what's called the surge, right? So we had the merge, and then soon we're going to have what's called the surge. And this is a plan to reach 100,000 transactions per second via some pretty sophisticated technology upgrades, a new transaction type called blobs. That doesn't sound very sophisticated, but it's initially going to be implemented via a technology called proto-dunk sharding, which is actually obviously very sophisticated. And fees on both layer 1 and layer 2 will be dramatically reduced. So the next time we get a run up in price that's takes Ethereum to $15,000, we won't see any significant effect on the usage of layer 1 for NFTs or stables due to the fees being excessive. And that will be a big win for everyone. So getting those fees down while we scale via this next gen upgrade with the surge is I think the future of Ethereum, and one of the reasons I'm so bullish on Ethereum as the world's computer. So lastly, let's see. I think applications of Ethereum are going to get big investment dollars in 2023. Right. So Vitalik published an article, which we can link to in the show notes, where he basically pointed out a bunch of things that he was bullish on: privacy preserving and real world asset-backed stablecoins, something I talked about earlier. And I do think that we are going to see a lot more tests in the algo stablecoin model. Terra Luna was not the last of this. Terra Luna had a lot of positive ideas. They let it grow too quickly because of what was happening with 3 Arrows and Genesis. The contracts should have controlled the rate of growth to prevent that from happening. And hopefully someone will take that to heart with future tests. I certainly wouldn't put a lot of money in an algorithm stablecoin that could grow infinitely large, infinitely fast. That's a bad idea. Anyway, within DeFi, Vitalik likes prediction markets. Prediction markets have not been a big success up until now, but I think that this could be a bet that pays off in the future. Vitalik says, he doesn't expect them to be multi-billion-dollar businesses, but I do think that the prediction market concepts from a research perspective will make their way into lots of different decentralized systems over time, and we'll see. But I have been a fan of the prediction market concept. I do think there's some regulatory issues that have to be worked out with prediction markets vis-a-vis gambling laws and whatnot, But I think that the more demand there is, the more likely the chance that stuff will be worked out over time. All right, so there's other issues around authentication, meaning how do you sign in with Ethereum? How do you make it super easy to participate in, things like ENS, where you basically want to have a personalized name on the Ethereum network? How do you do attestations? DAOs is something that I'm super interested in, and I think we're going to continue to hear a lot more about. I think you're going to see different types of DAOs emerge, communities that are decentralized, which may be decentralized for efficiency, some that may be decentralized for interoperability and other reasons. I suspect we did a couple of shows where we talked about DAOs last year. I suspect we'll see more of that in 23. I know that the Crypto Banking Alliance continues to be very interested in a DAO model there, and we'll talk about CPERCs, I'm sure, in the Q&A in a minute. And then lastly, I think hybrid applications, he mentioned, that use blockchain and non-blockchain systems for things like voting, auditable services, especially post FTX, where you want to do things like proof of reserves online, which is something that we're looking very hard at for post banking license for Abra. So a lot more to be done there. So I would love to hear your thoughts on this. If you want to respond in the comments section on the YouTube feed or in the Facebook feed, feel free. Would love to, or Twitter for that matter, would love to see everybody's comments on what you think the key themes for 2023 are. Did I get it right? Did I get it wrong? Am I full of crap as usual? Whatever. So all good. By the way, so Bitcoin's got a little mini pump since we started the show. Up now 2.8% on the day, and Ethereum is in the green. So again, nice run up since the start of the year. I think Ethereum was at 1190 and is now at 1420 over the past 2 weeks. So today happens to be Friday the 13th, so I'm not going to jinx anything. I'm not a superstitious person at all, but I think things are funny and fun sometimes, and I think the way people react to things like Friday the 13th is kind of fun. So don't want to jinx anything, but it is Friday the 13th. All right, I'm going to do a couple of minutes of Q&A here. I do have a bunch of questions about CPERCs withdrawals, so I'll address that one first. Yes, we have been testing CPERCs withdrawals for the past month. CPERCs is not with withdrawals. Let me start over. CPERCs withdrawals work differently versus other withdrawals in our system, since CPERCs is not tradable on the exchange partners that we use. And that basically creates more complication. It is almost done. There was some bugs that we needed to fix before we enabled the withdrawals. It should be any day now, certainly before the end of the month, but I suspect sooner. No promises on an exact day, but I suspect any day now. So CPERCs withdrawals, fully committed to that. The team's been working on it, fixing some last minute bugs. It's coming, and it's all good. All right. Let's see some other questions. People were asking about Flare. I don't look. So I think when this whole thing was first announced a couple of years ago, I think that we were looking at this via some of our, at the time, partners. I think that given our current roadmap and how busy we are, I don't think a Flare airdrop is something that we're going to get to anytime soon. In general, we don't promise access to specific drops or forks or anything like that. I would like to do it, but it's not something that that we're probably going to get to anytime soon. So just to set expectations, very unlikely to happen anytime soon. All right. Okay, if you want to keep asking for the future, and we'll try to get to it, but yeah. What do I think of the situation at Nexo? Idle I think your name is. I apologize if I say it wrong. What do I think of the situation at Nexo? I don't really understand what's going on. I know that they've pulled out of the US market. I don't know exactly why. I mean, there's a very clear model for operating in the US, both for spot trading, running an exchange, even paying yield. I mean, there's clear models, right? We do Abra Boost in the US as a as a security offering for accredited and investors who are qualified, and also provide the service outside the U.S. So I don't know why they pulled out of the U.S. market. I saw some of the news about what's happening in their home country. I don't really understand why it's all happening. I hope there's nothing nefarious going on for the sake of their clients, but I really don't know. I don't know the guys from Nexo. I haven't paid that much attention to it. I know I'm focused on Abra and making sure that we continue to provide the highest quality service we can, keep our heads down, and continue to execute while all of this nonsense that we've seen in the markets continues to play itself out. Okay, what is Abra's relationship to DCG? So, DCG was a very, very early investor in Abra, probably one of our very first angel investors going back to, I think, to 2016. And, DCG basically has almost like an index fund where they've invested a whole bunch of startups, usually from 100,000 to 500,000. To my knowledge, they don't invest really more than that ever, or if they do, it's on an exception basis. And I think they probably put like 200,000 in Abra, if I remember. Certainly not much more than that in our either seed round or Series A going back like 6 years now, I think it was. Anyway, so that's it. So that's and I know I've known Barry a little bit for over the years. I do think he wants to work this issue out. I think his approach was probably a mistake. I think maybe he recognizes that now. It's unfortunate that the SEC waited until, Gemini and Genesis started a public spat to file lawsuits. Just like with Ripple, they could have, basically told them to stop via cease and desist. And my guess is Gemini would have turned it off immediately. They could have done that 18 months ago, but for whatever reason, they didn't do it. And even Gemini said yesterday that the service was approved by the New York DFS, the Department of Financial Services, which oversees their trust license. And to my knowledge, a trust can borrow funds from their clients, right? We used to do that with Abra Earn. We switched that to a securities-based model, but we used to do it via trust, just like they did. And two, they had lots of discussions with the SEC where they never even came close to insinuating that they were going to basically be sued, or if they didn't shut it off, they would be sued. So it's not really a bad look, and I'm disappointed as an American in the SEC's approach here, as opposed to giving very clear guidance. You can't just say everything's a security and call it a day. That's just not guidance, right? So to be clear. And I think David and a couple others asked this question, right? So Abra Boost today is only offered to qualified accredited investors in the United States. And it's a change we chose to proactively make because we were concerned about this very issue that the SEC was not giving clear guidance. And even though we were issuing the accounts via Prime Trust, and Prime Trust was basically borrowing the funds from the consumer, we simply decided to change the model and make it more in line with how the SEC sees the world, even though they've never really given clear guidance. So that obviously was a good move in hindsight, but I do wish they would, stop regulating by enforcement and start giving more clear guidance, as opposed to just saying everything's a security, because everything is not a security. All right. Let's see some more comments and questions. Some folks have raised lending rates. Yes, we've seen that as well. We have not raised lending rates. We're very comfortable with our borrow rates. So if you're looking to borrow against crypto, now is a very good time. The collateral requirements are very reasonable. We still have a zero interest option for people who want to deposit with Abra and then borrow against their crypto. It's still a good viable option for many of you, I'm sure. Let's see, more questions about Gemini. I think I've said everything I want to say there. As I see more in the news, I'll certainly comment. And let's see, environmental footprint is a scam. Yeah, look, J01, I tend to agree. I think people who don't really understand the nuances of both how carbon footprints work, how cyclical nature of the weather works over hundreds of years, and also how crypto and the whole military industrial complex as it relates to energy usage works are very hypocritical and with all of this, and it scares me. Let's see. Yoshi says, talk about no-hide laws. I can't talk about that since I know nothing about it. Let's see. Valerian says, I can't see how Congress can get behind Bitcoin with all of the goals to become carbon zero. I don't know. I think the two are mutually exclusive. I think crypto is mostly proof of stake now, which, you know, is producing effectively zero carbon in most cases. So Bitcoin is the exception, but Bitcoin uses less money than the Fed does, right? If you actually break it down in terms of the carbon footprint of the banking system, it's worse than Bitcoin. So it just doesn't make sense. Anyway, enough of that. So NFT is going to be the most effective way to get normies into crypto, says Ask NW Clips. That may very well be true. I don't know. So people are asking about updates on Amex and NFTs. So we will get back to you in the next week or two on Money Talks with updates on the launch timing for that stuff and our plans. We've seen, you know, just with everything going on right now, we're reevaluating timelines for different stuff. So just bear with us there, and we'll get back to you. Somebody saying, you know, comment on CPERC's price. I was looking at it yesterday. I don't, you know, obviously I'm in the same bucket of all of you. I'm just holding my CPERCs long term. CPERCs today is the exact same price that it was in June of last year, right? So on June 12th of last year, it was, or sorry, June 13th of last year, it was, I think, 0.00988 cents, and it's basically 3 millionths of a penny less than that right now. So you know, this whole comment about price dump, it's just not true. But anyway, it doesn't really matter to me because I'm more about the future applications of CPERCs, as you all know. I've talked about it many times. And like I said, we are turning on withdrawals. It's being tested right now and should happen in the next few days, if not sooner. All right. Let's see. If SEC would approve a Bitcoin ETF and DCG could convert GBTC into an ETF, would this help everyone? Charles, I think it would. I think it would because it makes no sense for consumers to be forced to hold a trust that's trading at a discount to another commodity, or the commodity that it claims to represent, in this case, Bitcoin. Right? It makes no sense. They don't do that with gold. They don't do it with oil. They don't do it with other commodities. It makes no sense that they would do it with Bitcoin. Right? I just don't get it. I think basically what it comes down to is that Elizabeth Warren, Maxine Waters, AOC, and some others in Congress just don't want crypto to exist. And as long as they're in any type of position of power and can make decisions, this is what we have to deal with. And this is what we have to fight against and contend with. And I think eventually the people will win, because I think eventually the people will get what they want. All right. Let's see. Some comments about airdrop Luna. I'm not aware of any of that. I think you may be confusing Abra with another company. But if you send an email to support@abra.com, I'm sure someone will get back to you if it is an Abra actual thing. Let's see. Really good questions today. Thank you for that. I appreciate it. I'm just going through some, kind of differentiate between some commentary and some questions and do a little bit of both. Does Abra hold accounts differently than Celsius did? Yeah. So your assets are your assets at Abra on the trading accounts 100% of the time. So you have 24/7 access to Abra Trade, right? And those positions are very clearly 100% reserved. You have access to, again, I'm repeating myself, but you have access 24/7. My understanding is that's very different than the way Celsius works. On the Boost side, it's also different because that's now in the US a security offering whereby you are investing in a security that pays yield. Okay. So Victor, it's a very different model from Celsius to my knowledge. I'm more of an expert in Abra than Celsius, so I can't overly comment on what Celsius did in the past. All right. So I was planning to do 30 minutes. We're now at 50. Which crypto account? Dave asks, which crypto accounting software is best for Abra users? Dave, I don't use crypto accounting software since I don't really sell crypto. I hold, and I did a couple of wash trades to get some tax benefits late last year, but I don't know. I think we are going to have some folks from the tax accounting industry for crypto on Money Talks in a couple of weeks. And so maybe if you join Money Talks, today's the 13th, if on the 27th, my guess is we'll have an answer for you then by talking to some guests on the show. So that is hopefully something you can wait 2 weeks for. But if you're an eager beaver and you need to figure it out now, I'm guessing that there's a bunch of online sites that would answer the question as well. So, and then David also asks, why would you withdraw your CPRX? I wouldn't. So that makes no sense. So I'm not looking to withdraw, but others are. People should have a right to do what they want. If you want to withdraw your CPRX, either to sell it on Uniswap or to put it in cold storage, that is certainly your right to do so. And we will enable that for you. All right. Okay. So that is a wrap today. Let's see. If you have support questions that I didn't get to, obviously support@abra.com. You can also contact support via DM on Twitter, and they will respond at some point. Usually we try to get to people the same day, but it can take 1 to 3 days to get back to you. Okay. All right. Thanks to the Abra support team that's been helping us out here online during the show. Really appreciate it. And again, Happy New Year, everyone. I hope you're staying dry and warm wherever you are. If you're in Miami, good for you. Maybe I'll join you soon. I can't take much more of the cold. I am heading out to the Middle East, by the way, at the end of the month for Satoshi Roundtable, and looking forward to warming up in the Middle East soon. All right, everyone, have a fantastic weekend, and we will see you next week on Money Talks.